Hey guys, Sean Pruitt here, president of Kingdom Exploration. I'm excited to see oil prices going up, and I wanted to give a little more insight as to what's going on globally to show you that we're in the long haul, oil prices will continue to rise. And I wanted to read this article here. China's superpower status at risk as energy nightmare intensifies. China has set its sights high, very high in terms of economic development, aiming to become not just one of the world's superpowers by 2049, the 100-year anniversary of the People's Republic of China, but leading superpower worldwide with such lofty goals. China has barreled full speed ahead towards the future, and now it's starting to look like the nation's hasty growth is finally catching up with them. China's superpower ambitions don't seem like such a far-fetched idea, considering that China is already the second largest economy in the world and growing all the time. But for China, this comes with a massive set of challenges. China faces a protracted, increasingly difficult struggle to secure energy and water supplies to feed the insatiable appetite, from having to sustain a population over 4 times that of America's 330 million. China is already at a severe disadvantage against the world's incumbent superpower, and so China has only a portion of the U.S. oil and gas water resources, and the gap in self-sufficiency is likely to widen further. So, guys, they've got 4 times the population we have, and they don't have the self-sufficiency that we have as far as energy. For years, foreign oil dependency was destroying the world because we needed their oil, so we'd give them money, and then they'd use their money for terror. And it was a continual cycle, okay? So we got off that cycle because now we're producing more oil than we need. Now we're a net exporter. They lifted the oil export embargo. That's been going for 40 years. And so bottom line, China's going through what we went through. And as China's economy expands, and we know how that story ends, as China's economy expands, so too does its bottomless demand for economic inputs and primary materials. And judging from recent events, the country is already scrambling to meet energy and water demand at its current levels, which is especially concerning when you consider that these demands are set to skyrocket. Guys, China's economy is a driving force of the world GDP. Their need for oil is insatiable, and 1% of growth is a massive increase compared to America. And so they're where we were 30 years ago, okay? We had an agreement with Saudi Arabia. We protected their assets, and they gave us oil, and we had that agreement. But the difference is that China, there's no option in sight. They do not have the energy that we have, that America has. They are not. They just don't have it. Okay, and so there's no way out of this thing for them. So they're forced to buy oil. But with everything that's going on in the Middle East, it's causing tremendous nightmare for their energy demands. And so China relies heavily on international trade to feed its industries, energy consumption, and the trade war with the United States. The attack on Saudi Arabian oil and subsequent sharp decline in production and pushback on Chinese claims to oil and gas rights in the South China Sea have all been heavy blows to China in the past month. So by the uncertainty in Middle East, so we pulled our troops out of the Middle East, which I've been saying we're gonna 2 years ago I said that was gonna happen, and the South China Sea war is their scramble for energy. They need energy, and so with everything going on in the Middle East, the fact that that they can't get what they need from the South China Sea because of the pushback, the sanctions we're putting a tremendous amount of pressure on China, and that's why we're having this major trade dispute with China right now. Okay, and now in another particularly unfortunate turn for China, a forecast report released by the International IEA in June reported that the country's natural gas consumption is projected to grow nearly double. Nearly double. That's unbelievable. Okay, now. Now here's the thing. We have the ability to put sanctions on other countries simply because we have what's called a central banking system. And so our central bank is in every country except for North Korea and Cuba. And so the reason why we could slap sanctions on people is because we could take their ability to use the central banks. Without that, they don't have access. And without our currency, we don't have that power. China doesn't have that same power. We have the dominant currency. 95% of all currencies, all transactions are done in U.S. currency. So their only option is to go against the petrodollar. Right now, the petrodollar is king. The U.S. currency is king. Okay. Now, what is Russia's response to this? And China is going to follow suit. Okay. One of the world's largest oil companies ditched the dollar. Russia's largest oil company, Rosneft, has already completed the switch away from the U.S. dollar to euros in its export contracts to minimize risk from potential new U.S. sanctions. Rosneft chief executive Igor Sechin on Thursday, Rosneft has already fully switched to euros as the base currency for all its export contracts and sees big potential in working in euros. So here, bottom line, guys, and I want to read this too. According to Rosneft's top executive, the Chinese yuan could become a much more important global currency in the future because of Chinese economic growth. Guys, what this means, guys, this is a direct attack on U.S. currency. Our currency has made us the global superpower. Without that power, we don't have the ability to print as much money as we want. The reason why we have the most powerful military in the world is because we could just print our military. We could print tanks at an unlimited rate because our currency is backed by the world economy. Not just our GDP, but the world economy. Russia has rubles, and they could only print as much as their economy could withstand. Okay, it's not backed by, our money's not backed by gold. It's backed by the world economy, the world respect for our currency. So Russia and China they're going against our currency. And so if China, the world superpower that buys the most energy out of everyone in the world, starts using their own currency or euros, what do you think is going to happen to U.S. currency? The demand is going to drop. What does that do? Causes inflation. Okay. Now, our currency, Saudi oil was being sold in U.S. currency, and that caused it to be the global currency because everyone that bought oil had to do it in U.S. currency. So we're printing money, trading it for oil. So essentially, we were just printing oil. We were printing oil. We were raping the Saudi Arabian lands for years. And now that we don't need their oil anymore, it's in shambles. Okay? They're falling apart. Why? Because we're pulling our military out. Why? Because we don't need them. China needs Saudi Arabia because they don't have their own infrastructure. They don't have the oil that we have. They need Saudi Arabia. They need Iran. They need Russia. They need all these countries. But if China is going to double their demand because they're expected their growth to skyrocket, and they start using their own currency, you're going to see massive inflation in the U.S. currency. Okay. Now, I don't know what's going to happen there because when Libya did this in 2000, we sent our tanks in, we destroyed their country, and we installed central banking system because they're trying to prop up the dinar. So this is the only way they could attack America is our currency. There's no other way. I mean, I guess they could drop a bomb here, and we'll drop a bomb on them, and they know that, and they don't want to go after the most powerful country in the world with military. Okay, and so bottom line, their only option is to attack our currency. And so Russia, that's their plan, and it's China's plan as well. And so a lot of people think, okay, well, inflation, the best way to protect against inflation is gold. That's actually not true. All commodities are anything that's not anything that you have to trade dollars for. That's an asset that will increase in price because essentially it's just going to take more dollars to buy that very thing you've always been buying. And so oil, we're used to buying oil in U.S. currency. That's why it's much cheaper for us. If you were in Russia trading rubles for a barrel of oil, you'd be paying a lot more for it than 50-something dollars a barrel, much more. And so as China and Russia work together to destabilize U.S. currency, there's going to be more people getting on the bandwagon, causing oil prices to what? Go up for America, just like it has gone up for everyone else. Not only that, it's going to cause inflation. So it's going to cost more money to buy oil. So oil prices are going to go up just on inflation alone. And oil investments, investing in oil, not only gives you tax benefits, but it's also a good hedge of protection against what is to come. And so I wanted to share with you guys my current plan here. Every oil project from here on out that I drill, I'm going to put it under a fund, okay? And so if you look here, here's 10 wells, and I know I've already explained this, guys, to you, but there are new people watching this video. Out of 10 wells, 3 of the wells that are drilled are dry holes. So if you invest in one well and it's a dry hole, that means you get a big goose egg. About 7 of 10 are commercial wells, okay? So 70% of the wells are going to send you a monthly check, okay? About 2 or 3 of the producing wells will be extremely profitable, okay? So let's say 2 out of the 10 are extremely profitable. Well, you got to be that 20%er in order to get that profitable well, okay? Risk of losing entire investment over all wells becomes negligible, okay? And so that's the benefit of getting involved in a fund versus an individual field. Not only that, your money's being spread across multiple fields. We're going to put every well from here on out that we drill underneath this fund, okay? And that means you're not only are you, it's a mutual fund of oil wells. Not only is your money being spread across multiple wells, but it's being spread across multiple fields, multiple engineers, multiple geophysicists. Geophysicists are guys that look at 3D seismic. I mean, it's spreading across multiple oil companies because it's not just one company producing oil wells. It's multiple. So multiple fields, multiple oil companies, you're being spread across. So it's a mutual fund of oil wells. Safety in numbers, probability of not recovering initial investment within 6 years. Spreading the investment over a sufficient number of wells statistically reduces the possibility of losing all your investment to negligible amount. 10 wells, 97% chance of recovering initial investment. 20 wells, greater than 99.5%. Okay. Now, here's, if this is based on 1 well, likelihood of loss, and then 20 wells, likelihood of loss right there, 99.5% chance of success. Okay, I said likelihood of loss. That's not what I meant. Okay, and so in the past fund results from 2009 to 2017, it was 18% annually on average and that's roughly a 9-year period. Average annual dividend yield after taxes, 27.5%. So if you include tax benefits, the average return was 27.5% over a 9-year period. So guys, bottom line, we're putting all of our oil projects in one fund, and it makes the risk negligible. And if you guys wish to learn more, feel free to call me anytime. My phone number will be in the description. Feel free to call me if you want to request information. There's a link there, and if you'd like to subscribe to my channel, please do it. I talk about oil and gas. I talk about what's happening in Russia, Syria, Turkey, China, and anything that affects global oil demand, supplies, and prices. All right. Nice chatting with you. Thanks.